I just turned 1 Sol into 10 Sol in less than a week. Here's how I did it. Things are shifting really fast in the crypto markets right now. For the last year or so, it felt like Solana was going to be the ultimate ecosystem for this cycle. Out of nowhere, the Binance ecosystem jumped in to take the spotlight and started its own meme season. And just like that, BSC memes died down. And now everyone's trying to figure out what's happening with the market, especially after the major flash crash that left everyone feeling uncertain. The point here is that the situation in the crypto space can change in an instant without any warning. The reality is that most people will either get burned by this or turn away from crypto out of frustration. Right now, the majority of crypto users are on the fence between bullish and bearish. It feels like things are pushing up to the next leg, but there's still fear and uncertainty. Many people have either given up already or they're taking a step back and waiting to see what happens next. But before you get discouraged by the crypto space, let me just say this. With every turn that crypto takes, there is always an opportunity that opens up. And the key to taking advantage of these opportunities is simple. Be willing to adapt. No matter what ecosystem you're in or what strategy you're running, the goal for everyone is the same. We all want to make it out of this bull cycle richer. The general belief for the crypto community is that we haven't seen the top yet. Many major indicators line up with this idea. Global liquidity is still on the rise, which means money is becoming available to flow into risk assets like Bitcoin and crypto. This goes along with rate cuts happening in the US to contribute to quantitative easing. The perfect setup for the crypto market to go higher. Not to mention, an entire list of spot ETFs are nearing their approval deadlines. But we'll need to wait and see how the government shutdown impacts this. Personally, I'm also waiting to move deeper into the cycle and reach higher highs. But I haven't just been sitting on my hands. I've been securing gains along the way. Remember how I said that I turned 1 Sol into 10 Sol? Well, keep watching because I'm going to discuss 3 simple methods that I use regularly that have helped me achieve this pretty quickly. But before I dive in, I need you to understand something. Anything in crypto is high risk, and even though I've seen success with these methods, that doesn't mean it's a guarantee for you or me going forward. I've also faced losses along the way while fine-tuning my strategies, and things don't always work out the way you hope. Anything can change in an instant. Just to look at how BNB dominated the altcoin market, then all of a sudden, Binance memes started dumping. Those that didn't manage their risk ended up losing a lot of their money. Now, keep in mind that nothing I share here is financial advice. This is for educational purposes only. Make sure that you always do your own research before making any financial decisions. Alright, so let's talk about turning 1 Sol into 10 Sol. Sounds pretty difficult, right? If you said something like this in the real world, people would think that's impossible. But in crypto, the opportunities are there to make this happen. And the truth is, it isn't easy. It requires good risk management, a ton of research, and sometimes a lot of patience. I mentioned 3 simple methods to reach this goal, so let's jump into the first one. Finding high potential projects early. I'm talking about newly launched tokens. Now, at one point, Solana was a place to go if you wanted to launch your own token easily. This year, we saw other chains ramp up their token launch volumes like Base and BNB. But if we focus on just the Solana ecosystem, they had an initial meme season last year with the help of Pump Fund. And since then, we've been seeing a shift away from speculative memes and more towards real utility projects. Even within Solana's ecosystem, there are many specific sectors and narratives that have a lot of potential. So let me show you what I mean with some real examples. When AI agents were becoming a hot topic of discussion, several projects were born with their own AI agent-related products. Griffin is one that absolutely exploded. Just look at the graph. Yeah, it did end up falling with the market retracing earlier this year, but we were actually talking about this project in the FireHustle Discord way before it flew up. In fact, I mentioned the Griffin project within the first 24 hours of the project launching, so you can imagine anyone that got in during that time would have seen massive climbs to the top. More recently, we just saw the privacy narrative start to get more attention, especially with Zcash moving up big. We talked about a super early privacy project called Zera in the Discord group. It was a different token when it first launched called Monopoly Money. But the point is, this also went up quite a bit since it was first mentioned in June. And the dev hasn't even released the product yet. Another one is Karma, which relates to payments and neobanking on Solana. I first mentioned this near the start of September, and you can see how far it's come, with even more potential upside. There are tons of different projects that I can talk about, But the fact is that getting into the right projects early enough can really pay off. So how do you actually find these opportunities before everyone else catches on? Well, let me break down the exact process that I use. The key is staying on top of shifting trends. One thing is knowing what narrative and trends are hot right now, but what you should be doing is looking for what's going to be big next. And this requires research and staying up to date with what's going on in the real world. For example, last year we saw big companies investing in AI and data centers. Eventually, AI agents kept popping up everywhere, and this fueled the AI agent wave in crypto. Then, more recently, the US Treasury considered adding digital ID verification for DeFi protocols. That would mean giving up your identity for something meant to be decentralized. After this, some of the biggest figures in crypto started raising concerns about the lack of privacy in crypto, including Toli and Mert from the Solana family, and this is spreading to other ecosystems. Not long after, Zcash made a big run-up, leading to a privacy boom in crypto. And I believe this is just the beginning of a major privacy push. But for each of these narratives, the key was being aware of what's going on in both the real world and the crypto space. X is also a powerful tool for research that I use regularly. As long as you can filter out all of the extra noise and token shilling, the crypto content on X can help you learn about shifts pretty early. Although it helps to stay informed with real-world news before it spreads on social platforms. But X is how I found out about Griffin the day it was born, and how I found Zera way before Zcash moved up to make privacy a hot topic this cycle. Now, it could get mentally draining to check your X feed every hour of the day, which is why the FireHustle Discord has been a game changer, even for me. We've got a full team working to filter out the noise and provide important market updates and insights. There's an entire community of like-minded members that also bring a lot of value to the Discord. I personally learned a lot from this group myself, and I've left a link to this group below if you want to check it out. So once you identify a narrative that's quietly gaining attention, you need to find projects that connect to it. But here's the thing. A connection to a narrative isn't enough to call it a good opportunity. You need more than just hype. Take Zera as an example. When we first talked about it in the Discord, the connection to the privacy narrative was obvious. They're building an offline digital cash system. But that alone wasn't enough to make it a strong play. This is where you need to ask the important questions. Is the dev actively working on the product? Is there a clear roadmap and objective? Is the team transparent and communicating with the community? With Zera, the dev is actively working on getting the products launched, and I actually spoke to him directly. He's been on multiple live calls to discuss the project with the community, which is a good sign. Zera Labs also became a member of the Texas Blockchain Council, and they're now registered as a company operating as a real business in the state of Texas. That's a real milestone. So when you look at this project, you see progress being made, a clear objective, and an active team that's communicating. This further validates that you might be onto something big. Now, even with all of this research, you still need to manage your risk. Don't go all in on one project. Scale your positions based on your conviction and the project stage. The goal isn't to just get in early, it's to walk away with some sort of profit, which is why laddering out of your position as the chart climbs is also important. Otherwise, you just end up round tripping all of the price action. So the first method is all about finding early projects and token launches. Now the second method I use to help build my soul bag is a bit more hands-on. It's trading perpetual futures. I know what you might be thinking. FireHustle has been telling me about all of these different exchanges to trade on, but will she actually talk about how to set up futures trades? The answer is yes. I'll share a trading strategy that's actually been working pretty well for me. First, let's cover the basics of futures trading. Think of this as betting on whether an asset's price goes up or down. If you think Bitcoin will climb, you open a long position. If you think it'll drop, you open a short position. If you're right, you earn profits. Now with futures trading, you can use something called leverage. Let's say you have $100. With 10x leverage, you can control a position worth $1,000. So if Bitcoin goes up 10%, you'd make $100 instead of just 10. But leverage works both ways. If Bitcoin drops 10%, you lose that entire $100. This is a liquidation event. Your liquidation price is where the exchange automatically closes your position because you've lost too much. With higher leverage like 20x or 50x, even smaller moves can wipe you out completely. And that brings up a very, very, very important point. Futures trading is very risky. The flash crash on October 10th wiped out more than $20 billion of traders' funds, and these were all futures traders with leverage positions. This event really highlights the dangers of futures trading and why it might not be for everyone. That being said, perp futures trading can still be a good tool to earn profits in crypto. The key is to have a good strategy to follow and good risk management. So what's a good trading strategy to follow? Well, I'll tell you what I've been doing. There's actually a theory about large exchanges like Binance nudging prices up and down to liquidate traders on purpose, because the exchanges end up earning this lost money as revenue. Marty Party is a big believer of this theory, and he used this idea to explain the flash crash. Now, he also came up with a futures trading strategy that lets you trade against these price movements, and I've had success myself with this strategy. So here's a chart that shows the liquidation levels for a crypto asset. This is an indicator called Liquidation Levels by Leviathan that you can access on TradingView. But you can see where high leverage positions are clustered. Red lines are liquidation levels for 100x positions, yellow is 50x, blue is 25x. The idea is that the price moves to clear these lines over time, wiping out traders' funds and earning the exchange's money. There's also an indicator called Liquidation Max Pain on CoinGlass that shows where traders feel the most pain from losses. One price target for shorts above the price, one for longs below, and some crypto assets have actually been bouncing off of these price targets. I've been testing this with many trades, and it's scary how accurate it is. These are potential entry points for longs and shorts. But again, futures trading is very risky and you can lose everything in seconds. Use low leverage, especially if you're new. Start with 5 to 10x max with small amounts, and always use a stop loss near your entry point to minimize losses. At the end of the day, no strategy is perfect. And even trading like this, I've ended up losing on several positions because of how volatile the crypto market is. Whether you're already a futures trader or you're looking to get started, it's easy to get overwhelmed by the amount of information out there. That's why the FireHustle Discord is a great spot to learn before jumping in. We've got a team out there that discusses futures trading basics and strategies, and they also share real-time trading opportunities with members. We've been getting great feedback from new members, so check out the link below to learn more. And to kick off your trading journey, you can sign up for an exchange that offers futures trading. If you haven't already, I have a few on my list, but the one that I like to use is BTCC. The charts are clean and the tools make it easy to follow your positions. No KYC required, no VPN needed, because it's accessible worldwide. And if you sign up with my affiliate link down below, you'll receive a 10% bonus on your first deposit. So I use the first two methods to generate profits, but then what do I do with this extra money? Well, that's where the third method comes in. Move a portion to spot positions on larger cap assets. I'm talking about coins like Solana, Ethereum, and other established projects with a clear path forward. The reason is very simple. When I catch an early project that does well or I close at a profitable futures trade, I don't just roll everything into the next risky play. I take a percentage of those profits, usually around 30 to 50%, and I move it into these larger cap plays. At the end of the day, we're still in a bull market and these established assets still have room to move up. They're way less volatile than microcaps and require less attention than futures trading. Not to mention, the flash crash didn't really impact spot positions because there's no liquidation involved. Instead, this was an opportunity to average down your buying cost. Regularly moving profits into spot bags lets you DCA into your favorite altcoins, but using your profits instead of your paycheck. The goal is to catch the rest of this move up while securing my profits along the way. And just like with the early projects, my plan is to ladder out of these positions as the prices climb. This way, I'm locking in gains at different levels instead of hoping to just time the perfect top. It's all about building wealth and actually keeping it. Because at the end of the day, it doesn't matter how many good trades you hit if you give it all back to the market. Now, something I want to mention here is that all three methods I talked about come with real opportunities to multiply your capital, but they also come with serious risk. Early projects can rug pull, or big early investors can dump the charts easily. Futures trading can liquidate your entire position in just seconds if you're not careful. Even large cap alts can pull back quite a bit during market corrections. That's why risk management is everything. Don't put in more than what you can afford to lose, and whatever capital you start with, use this to build your bag with profits, and those profits can help you make more profits. That's been my personal strategy as well, and always have a plan to secure your gains along the way. If you want more tips and strategies on how to navigate the crypto space, then the FireHustle Discord is a place to be. Link is down below. And if you found this video helpful, then make sure to like, subscribe, and drop a comment below. Please remember, none of the content that I share is financial advice. Make sure to do your own research before making any moves in the market. Thanks for watching, and I'll see you in the next one.